Trivedi College of Commerce, Semester 3, Unit 2. Topic: Difference between Money Market and Capital Market. I, Professor Shimoni Trivedi, Head of the Department, Management. Capital Market. What is capital market? Capital market is the backbone of economy that mobilizes savings into investment. It refers to the market for long-term securities that have direct or indirect claims to the capital. Long-term securities refer to the financial assets whose lock-in period exceeds 1 year. Capital market deals with both equity as well as debt instrument. It provides institutional arrangements and facilities for raising and investment in long-term funds as well as facilitates marketing and trading of securities. Now, this capital market has been divided into two parts, primary and secondary. Primary market means over here the securities are issued for the very first time. The newly issued securities are traded over here. Whereas if we go to secondary market, over here already, that is previously issued securities are bought and sold. Next is functions of capital market. Capital market is mobilization to savings into investment. It is well known for it. Channelizing savings into investment. Facilitates trading in securities such as shares, debentures, commodities and other financial assets. It assists in the process of determination, that is through demand and supply forces. Enables the settlement of transaction as per the fixed time schedules. Over here in capital market, minimum transaction and information cost occur. Next over here we have is major constitutions of capital market. Stock Exchange Board, that is SEBI, Security and Exchange Board of India. Stock Exchange means which includes National Stock Exchange, Bombay Stock Exchange, OTC, over the counter and so on. Next we have that is Financial Institution and NBFC, Depositories, Clearing Houses, Foreign Institutional Investors, Merchant Bankers, Mutual Fund, Investors, Stock Transfer Agents. Now we move on to a brief introduction about what is money market. Money market refers to the market where short-term monetary assets are dealt and borrowing and lending of funds varies overnight till a year. Short financial assets refers to the assets that are readily converted into cash and within the period of 1 year with minimum transaction cost. These assets are known as close substitute of money. As we know that money market is a place for the lenders and borrowers to exchange short-term funds for fulfilling their liquidity requirements. Place for borrowers and lenders. It has no physical existence and transaction takes place over a virtual network such as you can say phone or internet, and after the confirmation it is done through email. Now this money market is divided into certain parts. Participates over here, organized market and unorganized market are the participants of the money market. Next we have that is money market instruments. Treasury bills, commercial bills, certificate of deposits, call money, commercial paper, intercorporate deposit, interbank term money are considered as the major instruments of money market, as money market plays a crucial role in evaluating the liquidity imbalances in the country by providing a mechanism for equating the demand for and supply for share transfer fund. Now we go on to the difference. What is the meaning of money market and capital market? A market for lending and borrowing short-term funds is known as money market. Capital market, a market for lending long-term funds, is called capital market. The next is time duration. The time duration of financial transactions in money market is up to 1 year. In capital market, the time duration of financial transactions is more than 1 year. Money market. The objective of money market is to satisfy short-term and current requirements of capital, whereas the objective of capital market is to provide funds for the establishment, expansion and modernization of business. Money market deals with short-term instruments like treasury bills, commercial papers, short-dated government securities and so on. Capital market deals with long-term credit instruments like equity shares, preference shares, debentures, bonds and so on. Fifth point, money market. In money market, capital gain to the investors is not possible, even though there is bullish trend. If we have a look in the capital market side, there is a possibility of capital gain to the investors in the bullish period. In money market, the rate of interest are comparatively low because of short-term provision of the fund. In capital market, rate of interest are comparatively high because of long-term provision of fund. As we know that the time duration of money market is less than 1 year. So comparatively over here, the rate of interest is low. And in capital market, as we know that the time duration is more than 1 year. So over here, the rate of interest is high. Seventh point. Liquidity. For cash liquidity of sources of money market, government has established DFHI, that is Discount and Finance House of India. Capital market. Cash liquidity is possible by selling of shares, debentures, bonds in the capital market. Eighth point. There is no need of any intermediary in money market. Whereas if we go to see in capital market, there is necessity of intermediary in the capital market. Means over here, intermediaries, what we are talking about is the broker. As we know that in money market, the transactions can be carried out smoothly and there is no particular clause made that brokers are compulsory. In money market, it is totally upon the investors. Whereas in capital market, it is compulsory to have the broker to carry on the transactions. Ninth point. Money market deals over the counter, whereas capital market deals at stock exchanges or over the counter, now even through the computers. 10th point. Players. In money markets, number of players are limited as compared to capital market, and there are unlimited number of players in the capital market. Regulator. Money market is regulated by RBI, that is Reserve Bank of India. Capital market is regulated by SEBI, that is Security and Exchange Board of India. 12th point. Requirement of a physical place. In money market, there is no requirement for a physical location to carry out the transactions, as we discussed while giving the brief introduction of money market, that the transactions can be carried out through internet or on telephone, and the confirmation will be given by email. So no physical location is required for the money market. But in capital market, transactions are carried on at certain definite place. Example, share market. So it is very much essential to have a physical place in capital market. Thank you.